Practical accounting, the better way to learn.
This is 10.0, folks. If this is all about liabilities, you're going to get a lot of stuff here because we're on the other side. We're on the other side, right?
Yep, we're going into debt.
We're going into debt, and we're going to show you all the things that you need to know about current liabilities and long-term liabilities and some stuff. We're going to break this down. How are we going to break it down?
We're going to compare. We're going to use common language. We're going to contrast. We're going to be concise. We're going to be like all over the C's of the alphabet.
So you need to check this out because everything you need to know about the current liabilities, the long-term liabilities. We're going to do payroll, notes, bonds, and you're going to like this because you're going to see that no one else is going to present this material the way that you're going to learn it. And also we have some practice problems that are going to help you to ensure that you know what you're doing.
So let's take a brief look inside.
Take us away.
Okay, liabilities. We're going to start out with the 10 basic transactions. And we're moving over here to a source of fundings. This is one way we pay for the stuff on the left. We can borrow. We're moving down our 10 basic transactions. We're going to reverse that to repay, very straightforward. Our use transaction is interest. We have an overview where we're defining all the terminology in this chapter. Current liabilities. This is often a big mess, sometimes a whole chapter in current books. We're doing current liabilities comprehensively on one sheet. And notes payable, including what a promissory note and the journal entries look like. An amortizations graph of the two types of notes payable. The CIA method. Here are the two types as an amortization schedule, and we'll show you how to compute these. And then we're going to give you a notes payable practice, calculations, and your solutions are over here to the right if you need them. Then we're going to repeat that with bonds payable. Bonds payable are, we're going to start out with a bond certificate and show you how they are similar and what the differences are. This is issued at par value. Then we're going to talk about when they are, what the market rates and features could make them issued at a different rate and how that works conceptually. Premium and discount amortization schedules for the straight line method. Tying it back. Journal entries with a straight line method. Again, this is a lot. It looks like a lot, but it's really condensed, folks. So, but this compare and contrast really makes it easy to see it both ways at the same time. And practice. Then we're moving on to effective interest, which you may or may not be covering in this chapter. But if you are, you can learn about straight line. And look how similar it looks. We're just going to show you the differences and how it's computed and work through how you can do that. And then you can practice again. And finally, we're going to show you a straightforward reporting of liabilities and work on liquidity ratios for short-term creditors, for struggling ink and flush ink, and work through 3 ratios for liquidity, 2 for solvency, which is long-term creditors, and we're all done.
All done.
All done. See you inside. All this content
and more
at practicalaccounting.com. See you there.